Good afternoon. This is Brian Split with Allendale here on Friday, May 21st, 2010 with your closing commentary. First, we're going to run through the grain trade, and we did have corn finish higher today. July corn was up 7 cents at $3.69. That was up 6 cents on the week. December corn was up 6 3/4 at $3.85 1/4. That was up 5 1/4 on the week. Moving to the soybeans, July soybeans were down 3 cents at $9.41. That's down 12.5 cents for the week. November soybeans were down just a half at $9.07 1/2. That's down 18 3/4 for the week. With the wheat, July Chicago was up 2 1/4 at $4.72. That's up a half on the week. Deese was also higher, up 3 cents at $5.20, also up a half on the week. For corn, news that China bought an additional 2 cargoes of corn was supportive on a day basically when the outside markets and the global economy was not melting down. So the equity bounce, some short covering, and after being able to hold the key 350 area on July was supportive technically, and we did have the market run through the 20 and 50-day moving averages on the high. One thing of note is that the market did fill some gaps on the daily pit chart that we left from May 13th to 14th, so that's where the highs for the session were left. If this market cannot advance through that area early next week, we may see a pullback down near this week's lows. On the soybeans, the initial rally looks like it was some technical short covering based on the fact that November soybeans violated $9 during the trade yesterday but could not close below that. We did fail at our short-term resistance on the highs today and closed back below the short-term downtrend on the bean. So we're still in a market here where we feel like we could retest $9, and really the outside markets are going to be key again next week. On the wheat, we again saw short covering there, and again it looks like more based on the idea that the July Chicago wheat could not go down and make new contract lows with all the selling that we saw this week. So if it's not going to make some new lows, if you're short, why not take your money and run and look to sell it again higher? At this point, we looked like the resistance on the July Chicago would be the downtrend at 480. Resistance to sell into on the November soybeans right at that 921 area. And really the high end of the trading range on corn for July is going to be right in that 380 to 85. Moving over to the livestock, we had the hogs up about $1.20 in June. Others were up 20 to 80 cents, but it was a higher day for hogs. The cold storage report this afternoon did show bullish information. We expect maybe a 25 to 50 cent higher opening on Monday morning based off of the report, but really we had 31 million pound drop in overall pork, and that is the largest drop for April that we have ever seen. So that could be taken as friendly. On the cattle, we had mixed trade today. June was down just 7 cents in the fat cattle. Feeders were down 20 to 30 cents overall. The report this afternoon was neutral with the placements and marketings about as expected. That could generate maybe a steady to 10 cent lower opening on Monday. But the caveat with these livestock right now is the fund involvement. Will the funds continue to liquidate? And that decision is probably based on what's happening Sunday night and Monday morning with the global economy. Moving to some of these outside markets, we did have crude oil finish down 76 cents today for July at $70.04. That's down $5.39 for the week, and that's down $18.32 over the past 3 weeks. We had equities trading slightly positive right now. We're up about 6 points in the NASDAQ, up about 12 points in the Dow at this point, moving into the last hour of trade. Again, we're seeing a little bit of short covering after the major selling that we saw yesterday. It's very interesting to see these markets pointing right at the lows that we had 2 weeks ago when we had that big meltdown with the Dow down 1,000 points. The S&P futures actually traded below the lows of that session. So I know everything was spun that day was an anomaly and it really shouldn't have happened, but here we are right down at those levels all over again. So take caution in the equity markets at this point. With the dollar today, again, we're seeing some profit taking. Market got really overbought. This euro is oversold right now, so we're seeing a little bit of position lightening up in those markets. Dollar's down about 18. We could continue to see some profit taking, push this dollar a little bit lower, but we do see 84 as major support for that dollar index. So at this point, really what I can say with extreme confidence is that the major mover in these markets at this point is the perception on what's going to happen with Europe. And it's a day-to-day thing. If the general tone is bearish about the global economic recovery, and the thought is that the austerity measures that European countries have to do at this point to get the bailouts that they need, if that stuff is going to come in to reduce global growth, then we could have that more deflationary mindset as we move forward. But if the trade comes in next week and they think that some of the measures that we're taking are going to help out the overall situation, it could be time to get a little bit of a bounce. And that's going to be your major influence over all of the commodity markets at this point. If you have any questions on anything, please give us a call at the office here. Our number is 1-800-262-7538. Otherwise, that's known as 1-800-2-MARKET. Or you can look us up online at www.allendale-inc.com. And good luck trading you next week. Thank you.